Welcome back to the Hurdle Rate, episode 29. I'm Tim Kotzman, broadcasting, not live because it's recorded, but broadcasting from the top floor of the Kennedy Center here in Washington, D.C. to kick off BTC in D.C. tomorrow. I'm not the organizer. I'm just an attendee, right? So it's an easy week. But I'm here with Jeff Walton, Ben Workman, and Matt Cole. September 29th. I mean, we're going to be in October before the end of the week. We already see gold ripping, silver ripping. Saylor was just on Bloomberg saying they intend to grow the AUM of STRC and then look to transform it into different currencies around the world. I'll throw it over to anybody. What are your thoughts on where we go from here?
Well, I think first, Tim, I got to ask you, when you attend these conferences now that you're in the business, do you look at the production going on around the conference in an entirely different way, knowing all the heavy lifting that went into pulling yours off?
Yeah, probably. I definitely can appreciate it. And we were joking around before we started rolling, right? I just look around, shake my head, and walk away. No, it looks like they have a great setup here. So I've not been to the Kennedy Center before, so I'm really excited. And yeah, it's I'm not Ed Julien, so I can't go to 700 conferences a year. I don't know if it's in my blood, but definitely looking forward to this one.
Tim, when you said that you were all in and dedicating your life to Bitcoin, I like audibly laughed because I was like, you were not before. So I mean, I kind of challenge the notion that you can make it to 700 conferences. I don't think you.
Well, maybe, it sounds like you're taking your foot off the gas, Tim, and we can't let you do that as friends. So,
all right. Well, I appreciate the intervention. You heard it here first on the Hurdle Rate, and I was on a flight down to Nashville last week to meet with the team, and I just thought, this is it. And I don't think there was any epiphany or additional thought that I didn't have before, but as Jack Dorsey said on stage at the first Bitcoin conference I ever went to in Miami in 2021, he said, Bitcoin's the most important thing I can do with the rest of my life. And if I need to leave Twitter or Cash App or what have you to make that happen, then I will. And obviously kind of did, at least with Twitter. So now just one of those moments, and you never know what's going to go be well received on X, right? When it had a couple 100,000 views, I thought, or impressions, I thought, that's interesting. You just never know what people are going to resonate with, I guess.
I guess in a little bit more of a serious tone, what I really liked about it is when you sent it out, it's when kind of Bitcoin was down, testing support, strategies breaking to like new lows this year versus Bitcoin. Sentiment in the market is generally low, and yet your conviction remains high. And that's something that, has been a continued experience of myself, is whenever, Bitcoin markets, such a volatile asset goes down, and you realize literally nothing in what makes my conviction so strong has changed. And yet you see people, on X kind of losing their minds with the volatility. And you're like, that is moments where that conviction actually shines. And for me, grows as well. And it's much different than if you would have sent that when Bitcoin rips to 150. Like, I'm all in. I still would have got 200,000 likes and views, but I think it's that conviction when the markets aren't ripping that I think is where you see people that are most likely to not only make it, but excel in this type of a market. So kudos.
I had some very similar reflection feelings this morning at the gym, or at the gym this weekend. It was just all this bearish sentiment, and I was just reflecting. There's so much opportunity on the horizon. Like, even if we go through ups and downs, I'm here for decade plus. Like, I'm here to make the world a better place, and I've got this like fury burning inside of me that nobody's going to stop. So I'm sure you're feeling some of the same power at that moment in time. So yeah, major kudos.
Well, you have those moments where you look back and you go, things are going to have been so obvious. And I think right now, one of those is you just look at the macro uncertainty that's out there across the world, right? It is chaotic. And because of that, when you're defaulting back to something that has absolute certainty to it, you can start to really reinforce that conviction going, this is what I believed was going to happen. And now that it's happening, am I going to shake out of my conviction now? This is kind of what I was preparing for. Bitcoin's that asset where you take that power back into your own hands, individual or corporation. And so when you're planning for uncertainty and you're planning for fear and then it shows up, that's not the time to abandon that conviction. That's the time to double down on it, going, this is the thesis that I was operating against. And this was a thesis I had over the next 10 years. I look at the last 10 years and I think to myself, if this trajectory continues and the world continues to devolve into more and more arguing and division and uncertainty broadly, where do I want to store my value? And that hasn't shaken one bit, because right now I'm not seeing a path that's clear that says, oh, this is all going to calm down and we're just going to go back to being normal and everyone being, I don't see it. So yeah, these are the moments where I've never had stronger conviction on Bitcoin in general as a long-term asset to hold on to.
I moved some Bitcoin into cold storage this weekend too, just for funsies. It was and afterwards I was like, yep, this is it. They're like, this is a bearer asset. Like Bitcoin is money, I reposted Sailor, Bitcoin is money, everything else is credit. And that's such a profound statement when you really start to like step back and you think about just how big that statement is. You start to just reframe how you see the rest of the world. Like even any equity is credit, any bond is credit, any real estate is credit. That you don't they're not a bearer instrument. You don't actually own the future cash flows of the company, right? And so that was it felt good. It was a good exercise to do this weekend, just to reinforce everything that's going on.
It reminds me of why I think a lot of people that are in the Bitcoin treasury space will take the viewpoint. I definitely have this viewpoint that the first step in being a Bitcoiner is to secure your financial freedom with self-custodied cold storage Bitcoin. And then when you think about your overall portfolio, these credit instruments like equities and Bitcoin treasury companies can play an important role in an overall portfolio, depending on your risk return profile over the long run. But the first step is securing your financial freedom. And I think that, you obviously have done that. I think we've all done that. And it's just such an important thing, is that you do want to secure your financial freedom, your financial future. And this kind of gets even to some of the FUD I used to see back in 2017, that like kind of FUD now, it only strengthened my conviction. An example was back in 2017, you would see Bitcoin sell off massively because China banned Bitcoin like 100 times. And you would again, right? But at the time, this actually moved the market in a major way, right? And people would be freaking out. Oh, China just banned Bitcoin. Like, okay, so a communist country banned a freedom money. Like, that actually proves the thesis. Like is that surprising to you? No, it's not. It actually should strengthen your conviction that this asset is extremely valuable, and for the reasons that you believe it to be valuable. And so it's like, or when COVID happened and they shut down everything, and the printer was going to go back on, and you're like, and Bitcoin's selling off to $4,000. It's like, wait, this is actually going to cause a lot of increase in debt and money printing. This is massively bullish for Bitcoin, yet Bitcoin's tanking at the time. You're just like, okay, conviction's never been stronger. And I think that's where, having the fundamental framework and fundamentals and technicals, diverging sometimes, is that, I posted all these charts, and like, I'm never someone that just looks at a line on the chart and says, I'm going to buy because it touches a line. But if you have a fundamental framework, and that fundamental framework is strengthened as an asset's going down into a level where there's like a theoretical technical support, that is an interesting place to consider buying more, going out the risk curve, those sorts of things for long-term positioning, right? Long-term meaning multi-years or multi-decade positioning. And that's how, when I was, in my prior life at CalPERS, how I thought about the world through what we call the mosaic framework of taking bits and pieces of information in a probabilistic framework to make good decisions, where any one piece of those on its own is probably garbage, but when combined together can actually help you make really good decisions. And I think that, is the place where we are right now, where fundamentals never stronger. Technicals have been in a good place to, buy the dip, and then we build and we wait.
long leverage is cleared out. Strategy, for example, doesn't have very much leverage on their balance sheet. So you think about the behemoth in the market. There's not a ton of leverage in the market. There's everything is pointing towards all systems go.
Well, you also look at the other store value assets right now and the way they're behaving. And I think that's actually confusing a lot of people at the moment. When you look at gold's been ripping, silver's been ripping, right? All these other traditional store value or risk off assets that people flock to when there's uncertainty or doubt out there in the market, they're continuing to just grind higher and higher and higher. And I guess that begs the question. I'm curious what each of your perspective is on that. Do you think that we now have a fundamental disconnect that's occurred between Bitcoin and these other store value assets, or is Bitcoin lagging the moves on these other store value assets?
Yeah, I think it's just lagging. And the reason I would say that is, gold was like a coiled spring for years and years and years, and it finally broke out, and it's doing its thing. And then you look at Bitcoin relative to gold, and it's basically sitting right below its all-time high. It's sold off a little bit recently, but ultimately, when that breaks out, I firmly think that it's going to break out strong, and I think that might take a little bit of time, because it's kind of been at that level since 2021. We're talking 4 years where Bitcoin has not made a new all-time high versus gold, and gold is ripping. So I look at that in and of itself as a coiled spring, and ultimately when Bitcoin breaks out at a new all-time high, I see the chart that just popping up here, that to me is when you start to see the massive positive convex move for Bitcoin. And not only that, I think it's when you see assets that are out the risk curve, specifically Bitcoin treasury companies, really start to rip again. And my view is that might take a little bit of time. It might take a few months. It might take 6 months. I don't know the exact time. No one knows the exact time, but the time to position for such a move is now. It's not going to be when it breaks out, because when it breaks out, it's probably going to be violently moving to the upward, and that positive convexity is hard to get in once it started. And so it increases my conviction, and also the need for people to have just a bit of patience while they're kind of watching these long-term macro events unfold.
Historically, I saw somebody else posted this the other day as well. Historically, gold has preceded Bitcoin's moves by like 3 months. And so, yeah, I mean, time will tell. We're still not at this Bitcoin gold all-time high. This really looks like higher highs and higher lows to me, but yeah, we'll see where this goes. We were talking about and just thinking about the psychology of it too. You've got gold, which has been around for forever. It's been used as money for thousands of years, and now it's competing against this new instrument, Bitcoin, which has been around for 15 years. It would make sense that gold would precede any movements that Bitcoin would make, as people that hold gold through any sort of rally will get to kind of these technically oversold or overextended levels, and look for alternative places to park the capital that may be a little bit more efficient. So I think the psychology seems to make sense, and yeah, we'll see where this goes. Keeping an eye on it for sure. Since you brought it up a couple weeks ago, it's been one of my go-to things that I'm taking a peek at within the market. I mean, what do you think, Ben? Do you weigh your wealth, Ben, in pounds? I don't know how much money I have, but I can tell you how much it weighs.
That's right. No, I do not, because when you're holding Bitcoin, it doesn't weigh very much. So, not necessarily the measure. But yeah, I mean, when you watch the trends that's happening just broadly, you can just tell that this is what people are searching for. And they're migrating out of the systems that seem to be manipulated and in kind of a spiral, I think, is the way a lot of people are looking at these now. It seems like we're close to hitting that point where you can't put the genie back in the bottle. And they're going to have to start frantically pulling levers to try to right-size the ship. And I just don't know, how much time there is between now and when they start doing that, right? When do rates come down drastically? We've got these massive home affordability problems. Now, Jeff, one of the things that really stunned me was on one of the other shows that you and I were on, where they pulled up that statement
The
from Fannie
housing.
Mae that was
Yeah.
effectively saying that the price of the median home needed to come down, I think it was 35 or 38%, or the median wage needed to come up like 65%, or rates needed to go down to 2.35% to achieve home affordability of 2019. And that's a little terrifying when you hear those types of statistics, because it lets you know just how much we've disconnected since COVID came around, in that it's not gone back to those levels. Wages haven't kept up with the rising prices, and that's just homes. That's not including everything that's happened at grocery stores and everywhere else. So it is a little terrifying. And I can see why there would be a significant desire to begin to hold store value assets right now, because this is a system that, when actively managed, has resulted in a dramatic loss of purchasing power and value held by the average citizens. So I think it is concerning, and I think there's a lot of reason for investors to be opting out of that. Now, you look at it the other way, and you look at, for investors that are savvy, looking at, like Matt said, going out the risk curve further, right? When you start to see these types of events line up, is that the time where you slide a little further out the risk curve, because you can effectively see what's coming, because you can count on them to go and manipulate to try to make, the economy stronger and things more forward. They're going to pull whatever levers they can to stabilize. So it is a balance. And I think it's one that people are going to be fighting for a while, because you're fighting it between what you know or what you believe to be true in the way that they will act, versus the desire to protect yourself and your family at this point in time. Luckily, I think Bitcoin does both. So I think if you're looking for the all-in-one asset, I think Bitcoin's going to be the winner in that race ultimately. And I agree with what Matt was saying, that when we do start to see Bitcoin make its move, I think it's going to be a violent move. I don't think it's going to be a slow grind up like a lot of people are expecting.
I'll show one more chart that we've talked about a little bit before, but I think the Bitcoin gold chart is probably what I think is the most important chart. But then the second most important chart in my view is DXY. And this line here, if you looked at this decline in DXY here, this was the 2017 bull run in Bitcoin. So basically, it was a bear market in DXY that correlated with an up move in Bitcoin. 2021, here you see April 2020, it's at a high. It sells off into 2021 when Bitcoin goes up. If you just look at the magnitude of these moves, they're pretty small moves, but yet they were very correlated with Bitcoin moving up as the dollar was devalued. And now when you look at, and just for reference, I think I've mentioned this, but this is a chart that I've been looking at since my days at CalPERS. I mean, I literally have not changed this chart for over 10 years at this point. So it's not like I just made this morning. This is a chart I've been looking at with these exact lines. Actually, not this orange line, but these white lines, and looking at this downtrend for a decade. So anyways, this is consistency here. But if you look at, it losing this historical support that turned into resistance to the downside, I think there's a decent chance that we could move substantially weaker. And part of the reason is not just because of a chart, actually. It's because literally the president of the United States, Donald Trump, has said he wants to weaken the dollar. And so when I talk about a dollar in DXY in like the sub 70 range, while it's at 97, that might seem crazy. But if you look historically, it was at 70 in 2008. It was at 78 in 1992. It's been substantially lower historically than it is right now in a multi-decade downtrend. And so it's not actually in any way saying the dollar is going to collapse, because the dollar didn't collapse in 2008. It didn't collapse in 1992. What it's saying is that when the president of the United States wants to weaken the dollar, when he's taking very drastic steps that I think, make more explicit the lack of independence at the Federal Reserve, and you have a debt crisis in this country, that it's not a crazy thing to say a weaker dollar. Now, if the dollar were to go down any level in this orange line, and you compare that to these other bull runs and the decline of the dollar, we're talking about an order of magnitude larger move in DXY than Bitcoin has ever experienced. Not than the dollar's experienced. I mean, look at these moves here in like the 1980s. Look at this bear market in the early 2000s, 2008. Like these sorts of bear markets have happened in the DXY before. If that happened, what would that mean to Bitcoin? And I think the answer is, in my view, the argument of a supercycle, what a supercycle would look like. Because I don't think that there's any other scenario, if you actually saw that type of weakness in the dollar, than a Bitcoin supercycle. And so, okay, like we're in an area where Bitcoin hasn't broken out versus gold, great level to, accumulate. You're at a level for Bitcoin of, some support. It's gone down, a little bit. I just think that people need a little bit of patience for a multi-decade macro situation to unfold. And in that scenario, this zoom out mentality, get your positions right and then touch some grass and, don't shake yourself out of the conviction is the way to do this. This is, investing in Bitcoin, going out the risk spectrum further into Bitcoin treasury companies. These are not get rich quick positions or trades. These are get rich slowly by having conviction to ride up the volatility. You ride up volatility with time. And I think that's, to me, that's why we even started the hurdle rate. Was this is a time game. This is a zoom out game. You need conviction and a long-term perspective. And there's going to be times where these things rip and, are up a few X, multiple 100% in a short period of time. And there's going to be times that are painful drawdowns. And the right approach is to ride up both of them and always check your fundamental thesis. And I think what we're all saying is that the fundamental thesis of all these things have only gotten stronger.
Matt, I think our listeners and viewers would be very upset if I didn't ask you the obvious question, which is, what do you mean by a Bitcoin supercycle?
Yeah.
Getting everybody fired up here.
Yeah. So get all fired up. So everyone might have a little bit different of a definition. My view is pre-super cycle, we would see corrections of Bitcoin in the 80% plus range. And I think those corrections probably go down to 50%-ish. So a little bit of less pain to the downside and more just up and to the right. And you can see super cycles historically for great stocks. Like if you look at when Amazon or Apple goes on these like 10-year plus just rippers up, and they're very painful for people that aren't positioned because they don't give an opportunity for people to get in the trade. They're just getting re-rated higher all the time. And it's hard for me to think if we did see that type of a move to DXY, that you wouldn't see such a scenario to Bitcoin where it's just like the people that are positioned are in a great position. And if you're waiting to buy the dip, you might be waiting 84 years because you might not. I say that in obviously hyperbole as the meme of the old lady waiting 84 years, but you just will not be able to get into the position easily because it's just keep going up. I think that is what a super cycle would look like, and I think that is my and more my base case when all of this political unrest unfolds. I still hope for the scenario that we don't wake up, in a month and Bitcoin's at $1 million. So I don't think that would be the good scenario for the United States. But the reality is those scenarios become more likely, not less likely, as you see unrest increase. But even if that's maintained, I think the tailwinds towards Bitcoin have literally never been stronger since I've ever seen it. So TLDR, it could go up forever. There is no top.
And at the end of the day, fiat is just credit too. Bitcoin's money, gold is money, everything else is credit. Fiat is just credit. We're like, we've been living on the system for people take fiat dollars as money because it's this genetic disposition that they've just known their whole lives. It's what their parents knew about money. It was what their parents knew about money. And it's just this extended credit system. Thanks for sharing that DXY chart. It was really fascinating, particularly what happened in the 80s too, looking at those, the huge spike and then the huge crash right after that as well. That's definitely a chart worth doing some historical research on.
Yeah, I wanna actually pop up real quick the Apple chart because I want to show what a super cycle can look like for an equity, because I think it's actually really interesting. And so Apple's chart here, you see from 2003 to 2025, basically just nothing. And you think about that and you say, goodness, like what would have happened like if, right here in 2005 when Apple breaks to new all-time highs, it would have been very difficult to find. I mean, here's a dip right here, but like it just keeps moving up. And you look at that even compared to like a Bitcoin chart, a super cycle, they do happen. You can look at Amazon and it had a over 10-year super cycle itself. Like these things happen, and when they happen, you better be positioned. And so anyways, I think this is this type of things that people need to be thinking about. And if it doesn't happen, then obviously they keep buying the dip. But to me, that it's hard for me not to think that's the base case at this point. With the biggest risk to Bitcoin historically being regulatory risks, at least in the United States, being written down to near zero. That we have to start thinking a little bit bigger for the asset.
Yeah, Microsoft looks very similar too. And on both of them, when you look at that journey up, they both had drawdowns along the way of roughly 40%, 35 to 40% on the way up there. But the problem is if early in that journey when it, disconnected and went on its super cycle, if you were waiting for the prices that you didn't buy at the first time, it never came back there for you. So be in position and be willing to sit.
As fiat systems falter, wealth preservation isn't a strategy, it's survival. While the world reacts, Swan Private clients are already prepared. Swan Private builds strong relationships with clients around mutual conviction in Bitcoin's long-term promise. With concierge service, deep expertise, and airtight security, the Swan Private team helps build generational wealth the right way. Swan Private's comprehensive Bitcoin wealth platform serves over 5,000 clients with more than $4.5 billion of Bitcoin purchased to cold storage. Swan Private is built for long-term partnerships. Get started today at swan.com/private.
What do you guys make out of this news out of the UK with this digital ID? Have you guys followed any of that?
I'd love to hear your news first. I have been following it, but what are you thinking?
So this terrified me a little bit when I looked at this, because digital identity at face value, you originally just go, oh, it's like having my driver's license on my phone so I don't have to carry it around all the time. That seems convenient. And then you start looking at graphics like this that highlight just how reliant you're now going to be on that digital ID. And it really does move you more towards that kind of social credit score system, particularly when you look at the ability now, once you have this digital identity, for control to be put in place over the financial services you can access, bank accounts, your online transactions, so any of the e-commerce. It's got the ability to impact the way that you can go out and buy, which effectively means they can likely shut it off. Traveling, mobility, use of your phones, everything about your life now effectively gets digitized with centralized control around it. And I think that's a rather terrifying outcome that people are likely to push back against quite hard. But it also tells you the value in self-sovereignty and how scarce that's about to become. If this sort of migration becomes the norm, where everything you have and everything about you, which it already kind of feels that way, right? Most of our lives are digital already. But if that centralizes around central authorities, where they now have the controls to put in place over you, and that's going to be everything from the wealth you hold to the places you want to go and visit to the way you want to speak online. I mean, this is a terrifyingly slippery slope, even if it starts with just one component of this entire graphic. But seeing the integration here and the way that they're looking at it, healthcare, another one, right? It's a terrifying web of control that it puts over your life. So to me, you've heard people, talk about the self-sovereignty multiple of, Bitcoin and self-storage, right? Having something that's truly bare or something you truly own in a world where you own less and less all the time, truly own less and less all the time, right? It's that age-old thing where they say, you think you own your house, stop paying your taxes and let me know if you still own that house, right? There's very few things in this world that you truly get to own, and Bitcoin is one of those. But I saw this and this startled me a little bit because while I thought this push was going to come, I thought it was going to be a ways down the future. I didn't think it was going to show up so rapidly.
Yeah, I mean, this is frightening stuff here, and I guess obviously it's in the UK. The UK does not have freedom of speech like we have in the United States, but the when you see things like this, I think the reaction from people will often and I say this like there's going to be people that are going to fighters, but that's always the minority of people typically. I think I look at like us as a group and Bitcoiners as peaceful fighters. And I think you saw a lot of peaceful fighters around the Charlie Kirk assassination that we're not resorting to violence. But if you look at what happens in a lot of other countries, like China as an example, people opt to self-censor. And that's what I saw when I was at CalPERS and dealing with certain things, is that the most common response there was, I do not agree with certain things that they were seeing, but I get paid. I don't want to take the risk for my life and for my family. And so I will self-censor myself. And, behind closed doors, I'll tell you what I really think. I think that's what people will start to do in the UK around a digital identity that they know can be weaponized against them, regardless of how strong it starts, that they know that this system is in place to oversee them that can really harm them in a major way. And I think a lot of the politicians would say, yeah, that's the point. We want people to self-censor, to think, but just how dangerous that is for freedom, or freedom of thought, for freedom of expression, freedom of speech, freedom of religion. Name your freedom that you care about. It's a very dangerous thing to have happen. And I am worried that the United States goes down that route as well, and that there's impulses for that almost on a bipartisan level across Congress in the United States. Maybe not the majority, but there's those movements as well, and just what that might mean for freedom at large, because you put something like this into the hands of the wrong person or the wrong group of people, and your freedoms can be evaporated very, very quickly.
I think it's always amazing the amount of freedom people are willing to give up for incremental convenience. And that seems to always be the way that it gets positioned, right? It's a benefit to you because this is going to be much more convenient. Imagine your entire life managed in one place where, we oversee it and make sure everything runs smoothly for you, and you get the benefits you're entitled to, and all these talking points. People are willing to surrender freedom in the pursuit of convenience far too much. And I think that's something that requires a lot of self-reflection, because it happens in incredibly tiny increments all the time. And by the time it's too late, you haven't even noticed that you were giving things up along the way. And if you had taken the entire package of what they took away from you and you had that information at the beginning, you would have had a drastically different reaction to those events. But I think when something like this comes out and you see it laid out in this way where you can think through all the areas of your life, and yes, this is the UK, but this is the Western world, right? I mean, this is the developed world that's putting this into place. And part of you has to look around and go, is this what things look like in the event that these governments lose control? Is this what you do in advance to prevent whatever comes on the other side of that? And I think that could be true. So convenience, can be great, but man, can it be dangerous in allowing people to overstep.
My initial thought was this is likely inevitable. As sad as that is, just thinking how zombified like a lot of society is with like social media and convenience, and just they're just lost and locked into what the flow of the world that is being pushed on them. as opposed to thinking critically about losing those pieces of freedom. So that is wow, a terrifying realization to have. I would hope like my generation and other generations would really push back on that, but I'm concerned that they may not be able to grasp the magnitude.
And I actually think that's kind of a dangerous, approach that a lot of people take. You look at something and you go, well, it's inevitable, right? It's going to happen. So what could I possibly do about it? And I think that's part of the issue is, collectively, we all look down the path, we're all viewing, we talk about Skynet. Sorry, my dog's defending us from squirrels. But we're all, we've talked about Skynet and what that would look like. And you've got all these shadowy companies out there developing all these technologies that can be used for surveillance and all these things. And you just think, well, with the advancement of technology, this is all inevitable. And it scares me a little bit that that's just become so accepted. It almost feels like over time, society's slowly been broken, right? You give up the fight that originally made places like the US really great. And I think that's one of the biggest risks that we probably face here is that people are willing to roll over on a lot of this stuff these days.
I actually think that it is solvable in the US at least. And I have a lot of conviction around that. And I think the status quo is that if no one does anything, it is inevitable. That is where the puck is moving right now. But one thing that I really learned and internalized in a major way in the battle that we had against ESG and DEI is when you see people behind closed doors not believe something, but yet are afraid to change, that you have a situation that's a house of cards. And that house of cards needs a group of leaders that are strong enough to make it safe for other people to step out and say, no, like I'm not going to do this. Because that's what I think most people right now most Americans are in the place where they're either their heads are buried in the sand, they're not watching it, or if they do watch it, they don't understand how to. But when you start a movement that makes it safe to stand out and say no. And I think, an encouraging movement that I've seen is just in the death of Charlie Kirk, of just how many people, I'm like a big believer in that movement, but like, even if you aren't a big believer in that movement, to say, my goodness, like how many people are talking about Christianity right now, wearing his shirts at football games, are making a stand politically that they'd never made before. And what we've seen, in the early days of Strive is that movements can be very powerful. And to use the analogy that's said a lot in the Bitcoin space is you can just do things. You can just make things happen. I do think that we can do things and we can make things happen, but they don't just happen naturally. They happen because people with conviction stand up and do things and say, you know what, like, there's a rise in political violence. If I'm standing up against the social credit score system, does that put me in danger? No, maybe, but my response will not be to do violence myself. My response will not be to, go in a basement and hide. It's going to be to continue to stand for the things that I believe in, and obviously not try to take risks or undue risks, but to say I'm going to do this no matter what. And when enough people do that, and I do think that there's enough people that can do that, at least in the US right now, that we can win a large part of that battle. And I feel pretty strongly about that, but we'll have to actually make it happen. The battle has not been won yet.
Bitcoiners have a really unique opportunity to be leaders of the next generation, like politically, socially, in their communities, really everywhere. So I think this continue to hit on this and speaking up, I think will just continue to be a general theme here over the next decade.
I think Bitcoiners underestimate how large that collective voice actually is. I mean, it's
a $2.4 trillion voice. It's a super loud voice.
You want to make a case for how this is going to win. It's going to be the biggest monetary voice in the world.
Bingo. Yep.
That's a pretty strong voice.
Yeah.
And as soon as we have the Tim Kotzman Freedom Conference out there where people are coming and speaking their voices, then we'll know we've got traction.
Thinking of scale, just looking at the this coming back to gold just a little bit here. Gold is about a $26 trillion asset as of today. In 2020, it was a $10 trillion asset, so it's more than doubled. It's gone up 150% in 5 years. And Bitcoin is sitting at a $2.2 trillion asset. It's number 8 on the leaderboard. So thinking about how loud this voice is. In order for it to be number 2, to surpass Nvidia, the price of Bitcoin needs to go to $210,000 per coin, about 211, 210, 211. And at that point, it's literally blue sky in front of it to $1 million, effectively. Because what's the asset worth, right? If it's already greater than all of the other equities on the planet, the next closest comp is gold, and that price point in between there is going to be interesting to watch because it's literally just blue sky between 26 trillion and 4.4 trillion. Now that voice will just get continuously louder and louder, and that's it's going to be an interesting thing to watch here over time. Everybody's shoving all of their energy into Bitcoin from a personal perspective, from a corporate perspective, leveraging it to buy more Bitcoin and front run the inevitability. We're cooking. Everybody's cooking.
Yeah.
Got a lot of passion, a lot of energy. A lot of things are going higher.
And you don't even have STRC in other currencies yet. We're early.
Yeah, perpetual preferred equities powered by Bitcoin are the new wave of the future. I think those are going to be very exciting, and we've yet to see the full, benefit of those hitting the ecosystem. I think we're going to see dozens. Should we talk strategy a little bit?
I heard they bought more Bitcoin today.
They bought more Bitcoin, but a very small buy. Everybody was really bearish on it. They bought 196 Bitcoin. They did leverage the MSTR ATM. I think they raised, 120 million last week. That's because the STRC dividend is paid out, I believe, this week. So that MSTR ATM was used to pay out the STRC dividend. Once again, those dividends are going to get paid. So I think Bitcoin per share came down just like a very, very monumental scale. But another thing I wanted to bring up here, so the end of the quarter is tomorrow. So it's September 29th today, end of the quarter is tomorrow. Bitcoin price as of today is $114,000. So the net income estimate I have for strategy going into, as a result of Q3, the Bitcoin price going from 107,000 up to, who knows where it ends tomorrow. But today at 114,000, they would post a net income around $2.5 billion to $2.7 billion, which is about $9 earnings per share for Q3. So just continuing to, hit the seams off of the baseball. They will continue to qualify for the S&P 500 as a result of posting now 2 positive quarters in a row. The last 4 quarters summed together will be positive. And I think that that narrative will continue to get stronger, assuming Bitcoin, again, closes tomorrow above, I think it's like $107,500, something like that. So very positive narrative on that front. And that's continuing to roll into what we think is a very bullish Q4 based on everything we've talked about here beforehand.
Just one question that I know came up a lot when we were looking at the earnings was, what time is that snapshot taken at for valuation? So I did go back and look at their SEC filings and then look at the Bitcoin pricing, and it looks like that is struck at the close of the markets, of the U.S. markets. So it was at 4 p.m. at the end of Q3.
So 4 p.m. tomorrow.
Yep.
4 p.m. tomorrow.
Yep. So
4
when
p.m.
people
Eastern
are
tomorrow.
doing those calculations, that appears to be the time you're looking at, or the price you're looking at. It also sets them up for the next wave of S&P discussions. If you end up with, now you've got 2 consecutive quarters of profitability behind you, right? You start showing that progress, that momentum, and that consistency, which I think just continues to strengthen the case over time. And it's all the dividends that get paid tomorrow for every one of the products.
Oh, it's all of them get paid tomorrow. Oh, this is a big one.
This is a big one.
Oh, man, I totally forgot that this is a big week.
Yep.
Okay, this is a really big week for all of the perpetual preferreds.
Yep. All the dividends get paid tomorrow.
Right. So TBD. Last time they were paid was the first time they were paid for STRK, STRF, and STRD. So we remember what happened after those got paid the first time. There was a ton of what seemed to be reinvestment of those dividends right back into them, and the prices of them just rocketed. And then that kicked off a new wave of just, I think, general excitement for all of the equity, all of the equities, the pref and the common. So, okay, big week, end of quarter, earnings close, all of the prefs getting paid, STRC getting paid. Okay, a lot to be excited about.
And it will be interesting to see how some of these behave because, my hunch was that it was the reinvestment capital going into low float that kind of spiked all of those products on that specific date for the first time that they got paid. I don't know that you'll get that same outcome this time, but this is the first time that a couple of them have been paid. So it'll be like Stride, I believe. Isn't this the first one for Stride? I believe so. So I'll be curious to see if we get that same effect because that was pretty electric price movement. It was almost concerning price movement when you're thinking that fixed income is not, wanting volatility, and that was some pretty wild volatility we had that specific day.
Yeah, and that the concept of being able to ATM that on the back end. So you've got all this drip capital coming in the door, and if you can ATM it and bring that back at the door, buy more Bitcoin off of it, just like taking it from the right pocket and putting it back in the left pocket, maybe with a little less than you started with, but cool concept, really cool concept. And of course, we're going to get how is it? The cash flow bears are going to come out of the woodworks again. Maybe they'll be silenced if they pay the dividend again. And, how are they going to pay the dividend? Well, they just paid it again via ATM and the cash raised over the last month. And it's actually a very small fraction of the amount of capital that is, trading their common stock equity every day, every week. So hopefully that helps just continue to say like this model can work, especially in a time of extreme fear for the equity itself too. So yeah, all positive. That should be good. True North this Wednesday will be fun. We'll get the close of the quarter. We'll hopefully see the preferreds come in. Yeah, that'll be good.
A strong True North episode on the horizon.
Yes, absolutely.
I had the inaugural digital networking breakfast this morning, and there were, I think, 7 Bitcoin treasury companies that presented, representing, I think, 5 different jurisdictions. So we're going global. That's what I think. We're just so early when you hear some of these, just how early everyone is in their journey, even just, the people on stage in Vegas and New York, right? It's like, well, they launched in May, or they launched, right? Like in 2025. So just kind of wild to think about that.
Totally. Yeah. And I continue to talk, and we talked about housing a little bit earlier. And I had a conversation with this couple this weekend, and they were like looking at houses. The two young couple, they both have high paying jobs, early 30s, and they're trying to buy their first home. And they're just like really struggling. And so it's crazy to see some of those numbers that we looked at, Ben, in action after having this conversation this weekend. And it was like, I talked briefly about Bitcoin, but you don't want to like just ruin somebody's life and say like, oh, if you would have, bought Bitcoin back then, you'd be able to buy a home. And it's just like, it's just a hard concept to kind of say like, maybe don't buy a house. Everything seems like really overextended right now, but again, you just don't know how long this kind of weird circumstance can last. Like it could get even overextended more, sure. But it's just a strange system and scenario that a lot of people are up against right now with a lot of uncertainty. But having those conversations with like people that are going through these problems also just continue to reinforce everything that we're talking about here. Is like you can continuously see these problems in different places in different aspects. And we're just still so early. And these are people that I think are like traditionally very smart people and like good with their money. And they're just kind of swimming and lost in the sea of the way things have always been done, and kind of turned off by like the general crypto landscape. I think the FTX blow up and all the stuff that happened in 2021 really ruined it for a lot of people. But hopefully that can change a little bit.
Yeah, I think most people are held back by their inability to distinguish between price and value. And they see the price of something move, and human nature has taught them that that can't persist. It must come down, even though there's examples all over the place of the exact opposite happening. But when you look out into the world and you look at the value of an asset, of something like Bitcoin, and you start to look at the trajectory that it's on relative to all the other assets that are out there, you realize we're still on the launch pad for this thing. You know, this hasn't even begun to catch up. The price has not begun to catch up to what the value of a true bearer, self-sovereign digital capital asset means, right? That's a hard concept to wrap your head around. It really is. I mean, it took me a while in the early days, and, you know, I'm still learning exactly what it means because it evolves all the time, because the world around us evolves. And so you're taking this asset that's really consistent and stable, and I mean that in the sense of, you know, the code around Bitcoin, and you're now applying that with new information around you, right? The world has changed. Now you look at the asset and go, does this change in the world increase the value of this asset or decrease the value of this asset? And I've yet to run into a scenario where I do that review for myself and I say the value of Bitcoin has gone down because of this event. Hasn't happened yet. So to me, the quicker people can start to look at assets like Bitcoin, and I think it's unique in this aspect, and understand that the market is not always efficient here yet. A lot of people won't find Bitcoin until they absolutely have to find Bitcoin. And by the time that day comes, you want to have found it long before they did.
I think we'll wrap it there and let you guys have something burning. I think we've burned it all up. Wow, this has been an amazing episode. Nobody knows what the future holds, including that an hour ago we said this is going to be a shorter episode today. So for Matt Cole, Ben Workman, and Jeff Walden, I'm Tim Kotzman. Thanks for listening and watching. We'll see you next week on the Hurdle Rate.